let's just start like higher time frames here on Bitcoin, right? So we recently had this big dump off that I was calling for on Bitcoin, and essentially ended up being a big liquidity grab into the center of our previous range. So basically around the 20k mark, you got these highs in our greater range, right? So you got your range highs through there, range lows kind of through there. You can kind of just see all those bounces there, and then we have like generally any range will have kind of some one or two median levels. In this case, 21.5 was what we were holding on to first. We fell below that and then held around the 20k, which was kind of our other middle level. I was actually looking for it to come down a bit further, but we didn't quite get that far, and instead had a massive rally coming out of the Fed basically bailing out banks, which is a form of quantitative easing. So basically there's again more money in the markets, or just more money in the system, and even with the stock market continuing to kind of dump off a little bit in the last few days, Bitcoin very much liked what I was hearing, and from the wick low to the wick high, we're up 36% in the last couple days. So yeah, this is very nice big moves here on Bitcoin. I personally got myself a bunch more on spot in the 20,400 region, and I basically got that buy pretty easy because we're looking at at that support level from our kind of our second middle level. So we're looking at this as a level and seeing what happens at a level. And in this case, right, we had a quick break below it and came up, and then we actually made a lower high, and it makes for a bit of a double bottom or W bottom, right? And we immediately got that higher low. So basically in this area, I bought a whole bunch on spot. Basically just stops below here, depending on where you what your risk is. I think, but yeah, I bought a whole bunch on spot at 20,400 here, with stops below that area basically to get it back down to like 18.8, 18.5. But it ended up just having a massive rally out of that news. And usually you will hear me say that I don't trade the news, right? I'll see, my chart will tell me what the news is going to be, which is largely true, right? You can catch these moves even when you don't know the news, right? So we didn't know this news was coming when we were making this this little bottoming pattern. So I did catch the move, right? So you don't need to know what the news is to be able to catch these moves, but generally I would attribute these kinds of moves where you just go vertically up in a pattern like this is you can credit news to some extent, right? I would say a little bit less when you get like patterns like this on higher time frames, right? So in this case we had a big dump, and then we had a very obvious little double bottom here, lots of consolidation, grinded up for a little bit, and then you get a big pump, right? That's kind of that's not so much news driven as it is just market movement, right? Whereas this I would attribute like 30% in a couple days out of a chart pattern like this is not very usual. Yeah, right now I am looking for this to come back a bit, but from looking on a lower time frame here, I was looking for a bounce here in this purple box around basically our little consolidation highs here. It got that. I didn't actually get in on anything here because it just nuked, but yeah, if it can grind out a little bit here and just maybe make like a slightly lower low, or the opposite where it does a slightly higher low, right? So you still get a bit of a double bottom. I might be looking for a bit of a long here back up to the range highs and maybe hold that to 27,000. But honestly, if we're losing basically, if we lose this low properly, like if we're getting below 24.3, I would be looking for this to come back to basically between 23.6 and 23.9, which is my little daily level here as I've marked it out, right? So our previous highs from here, our previous support here, and our previous resistance here, right? That's where we got that level from. If we lose the weekly level at 24.3, I would be looking for it to come back down to the daily level, which I'm pretty sure lines up with my pigeon pocket. Yes, so this lines up with what would usually be the 382 fib. So if I draw it properly, you would see my 382 right there lines up, has confluence with that daily level. So I would be looking for a bounce there. But again, we look for reactions at these levels. I'm not going to blindly bid a level like this, especially not when we had a vertical move up, because vertical moves up can move vertically down, right? So any action that goes like this can come back like that, right? Whereas if you grind up, you're going to grind down usually. And you might have some bigger moves in there, but what you'll see is that we didn't really trade much here, right? I just had really big candles down, and you could see that it basically just resulted in really big candles up.
Qu'est-ce qu'il y a? Non, chérie, tu es assez grande.
Okay. Jax, you got your mic open, mate. Yeah, I would be looking for this to come back to
D'accord.
23.6 area. If it doesn't bounce there, I would be actually looking for it to find confluence on what would actually be the 618. So if I pull it like this, we've basically got our 22k lows again. The only other level I could see is maybe if we get a little retrace, we get basically we do want to hold 23.6, but we get a quick wick down to 23.1 just to touch that monthly open, because price likes trading around the monthly opens. Got a little indicator here as well, which might give me some more confluence. It's the session volume profile, and it'll basically tell you where the most volume was traded within each day. So if you go on Trading View, pretty sure it's free, you can get session, you search session, you get the session volume profile, and then in settings, extend point of control right, and you'll get all these bars on your chart. And price tends to trade towards these levels. So you can actually see yesterday, it literally wicked right to one of those levels, came down a bit before the close. And right now we've got one of those levels at 22.5. And usually these act like little magnets, because price likes trading to where there's volume. So in this case, right, we're looking at a vertical move up. So we're like generally you get deeper pullbacks, or say more aggressive pullbacks. And in this case, we could, like as I said, if we don't hold basically these highs at 23.6 ish, I would be looking for this to trade back down to 22,000 area. That's basically our next line of support, if you will, and that does then again get us to that POC there, that high volume spot. So that's some further confluence. As for how this, like right now, this doesn't really look too great from a chart perspective. So we've had like this vertical move up, but if we're having a daily close like this with a massive wick basically above all our highs, but then a close below, right? So if we start close basically below our daily today, below 24.8 is what I would say. I would be looking for, like, if we get a rejection candle here, I would be looking for actually pretty strong shorts here. And as I said, that again lines up with 22,000. And this could be a big swing failure pattern. So 22,000 would be a big target for that. And then, I mean, we could see further down to, or we could just, right? So we established basically this range, 21.5. We've got this median level here at 20,000. We can kind of put in another one here now with 22.5, right, or 22.6. We get these lows, this little high, this high, right? So these are minor levels. So I'll just make these a little thinner. But these are less relevant than the range highs, basically. But if we do come down, if we do fail to close above the previous highs, get this big wick, I would be looking for this to reject here and then see moves back down to that 22,000, 21.5 area maybe. But yeah, I think overall we will just be ranging here, and I think that would be actually max pain for a lot of people. I think there's a lot of aggressive shorts now that we have this move up, but unless we just hard break out of the 25,000s, and we can hold above those, I am not looking to get overextended in longs. And as I mentioned earlier, if we do basically close below my weekly level at 23.4 on like the lower time frames, I'll be looking to take some profit on my spot Bitcoin that I loaded up in the 20,400s. So yeah, I'm just trading all of these moves.
Why did you enter 2400?
So I entered at 20,400 because we were coming on this basically long time frame. I get rid of this. There's a big trend line that I have open from like basically our previous November high, our April-March highs, 2022. We broke above them, retested them in Feb, so it confirmed that it was still relevant. We came down onto that, had this big, we had this wick close around it. It also lined up with this minor support level that I drew on this chart, right? So I had some support confluence, and then I was seeing some bottoming action around there, right? So we got an aggressive move down. We stopped around where I drew my support, right? And then we had a little move up and then a higher low, and then I basically got in around here on spot. And these are just very good risk reward trades, right? Because you just put your stop loss below that low. Even if I was just looking to trade this back to the previous resistance, or like basically what used to be support, now resistance, right? That's a 2 risk to reward. So I could take I could lose 2 of these trades, and as long as I win 1, I'll still be break even. But in this case, it went much further than that, up 23% from there, right? So for a spot, it's a bit different. But yeah, generally these are just good risk to reward. You find where likely comes, and you just if you see some bottoming action around the level, right? If you see a reaction that gives you some confidence at a level, then I don't see why you wouldn't just take along there, right?
Yeah, makes sense. Amazing.
Said if we'll break 24.3, I will actually take some anyway because I'm up fucking 25% in a couple days. So basically, I am buying Bitcoin for the long term, right? But I'm looking to grow that Bitcoin at the same time. So I'm never selling my whole stack or anything. But all of these moves, right? So I started buying Bitcoin right as we hit 23,000 here. This is where around my first buy was back in June last year, and I was basically buying all throughout this area. But I would take profit on these runs, right? On these pump. I mean, I didn't get that one, but I would take profit in this area. We ran it down. I added that what I took profit, I just bought back here. We had another nuke, bought a bunch more in this area, ran it up big, took profit here, right? Then bought that and more back, right, when we hit 21.5, because that was the level I was looking for it to bounce. It it gave me the reaction at that level that I was looking for. And then I was just able to just keep compounding those gains, right? So every time I'm catching these little moves, so I got in around here, well, I just caught a 45%, 40% move, right? So I took some profit, and then I kept myself from an 8% down move, so I bought back in plus some more, and then I got another 15% move up, and I took some more profit, and then there was a big move down, and I was, I took some profit, so I didn't catch it, but then I bought back more around here, and I'm up fucking 20% again, right? So every time I'm getting a little bit more Bitcoin than I had previously, and I'm getting it cheaper and cheaper. So essentially, I'm getting more and more money, even though I'm in this for the long term. Now, as I said, I'll never do this with my whole stack, right? I'm never going to sell all my Bitcoin on this rally because I don't know what price will do. I can only say what is probabilistically likely, right? I can expect it to do something, but it doesn't care about my expectations, right? I was not expecting this move up here. I was expecting a move back to 21.5, maybe 22.5, right? I was honestly expecting lower, but I saw some bottoming action around the support level, so I bought in, right? I didn't get caught up in any nonsense, and it paid off.
Do you think we'll see a breakthrough of 25K today?
I honestly don't know, mate. Like, we've got 3.5 hours left in the day, so basically, if we don't hold and just hard bounce here in the next few hours, like it doesn't seem that likely to me unless we just absolutely get a massive rally out of here, right? So on a 15-minute, if I'm looking on this chart, I actually got it drawn here. We'd be looking for a basically higher low here, and then immediately rally back up. I mean, I could maybe see this come. I mean, we'd have to close above the highs. Like, I would have to say, it'd have to come basically above that level, I would say, to look very good. Which on the higher time frame, I mean, that would be like it could still happen, right? So it can definitely still happen, but I don't think it's as likely right now. And I think a lot of people got overextended here. Yeah, I think a lot of people just heard that things are bullish again, and I think we can see like an extended rally here, but I'm also just being very careful, right? And just because this closes a big wick, right, doesn't mean it has to reject. So I think it's most likely it will reject if we get stay with this big wick here. But you do get some rallies in crypto or in charts where you get a big wick, and let me see if I can find any, but you still continue down anyway. Yeah, so I mean, this is kind of an example here, right? You got a big wick, and then that just continued anyway. Here's another one, right? So you get big wicks on the downside, but you continue anyway. So it is definitely possible. You can always continue, like, it's always possible, but right now it's just I'm not too certain, and I'll just wait and see, right? I'm not looking to aggressively enter longs here. So I'll play some scalps if I get like an entry around this area, and otherwise I'll look for an entry around 23.6. But I'm not going to force anything because this is not. I can't tell you with high conviction what it's going to do here because we are at resistance, and this is an important thing to keep in mind always when trading. Right? Is we look for shorts at resistance, and we look for longs at support, right? Because resistance is more likely to hold than not. So when we get these big ranges here, if you will, right? This thing held throughout the year. It held here, right? So until we break and confirm a break, I'm not overly bullish because right now I don't have a fantastic risk to reward on a break here, right? I can't put my stop loss anywhere, right? Because this is all just open price action, right? So this again, big move, vertical moves up can come vertically down. So I have no obvious place to put my stop loss. I'd have to look for some sketchy thing on the lower time frames. We haven't confirmed above it at all yet. Whereas if I look for shorts, right, even if I enter here, I got an obvious exit above that wick. If we're looking on lower time frames, we could probably find lower, even lower stop losses, right? But if we're just looking at this on a daily, right, I'm looking at a resistance level, which again, resistance is more likely to hold than not. Like you'll get multiple touches, but only one break, if that makes sense, right? So, but even in this case, if I'm just targeting back down to 21.5, right, our median level, that's a 2 risk reward. If I'm targeting back to 22.6, that's a little, that's our like earlier median, which I wouldn't even care too much about right now in this context. But even that is over a 1 risk reward, and that's with this, with our stop loss above a very high wick, right? And then we could even target back down to these lows or to even the range lows, which just, these are very good risk to reward trades. Whereas if I'm looking for a break here, you know, again, I have nowhere to put my stop realistically, right? I'd have to look for lower time frames, what makes sense, or look for like below certain levels, like below 23k, because that's where these lows were or whatever, right? I gotta find some place to put my stop loss, but realistically, I would have to put it like down quite a bit. And then I'd be looking, well, the next target is, I'd be looking at like the low, like 28,000, basically the lows here. Maybe you could aim 28,005. So, yeah, it's definitely still possible, but your odds are just not as good. Whereas if you're looking at, if you got some more data here, right? So if we get a few more closures or some more higher time frame, because right now this could just be a swing failure pattern with a big wick above, and then we come back below, right? Wick above, close below, and then you get the rejection candle. That would be great for, whoops, that was not my intention. Yeah, as I was saying, that's often a liquidity grab, more downside type of pattern. I mean, in this case, we grabbed a lot of liquidity coming down here, so we had a little manipulation fake out to the downside, if you will. So I do think we can see a lot more upside here, but I'm just going to be being very patient with this. I want to see this actually break and maybe get a retest on the lower time frames, right? I'm not going to look to get in anything aggressive here. At the most, I'd be looking on low time frames, right? I'd be looking for bounces and this kind of stuff if I'm getting in longs, and then it just be, getting these lower time frame entries, say something like that, stop below the wick, and I'd be targeting back to the highs, but I'll just leave a small part of my position open for, say, 28,000, right? So it'll just be like a runner of the position, because if you actually check realistically a runner position, like scalping, we're often taking way bigger position sizes, right? Because to catch, we're trying to make money, but if we're catching like a 1 to 2% move, that's not too relevant. So we lever up and we increase our position sizes. Whereas if we're taking swings, we're not looking to risk half our account on a swing. So generally we'll be risking, we'll be having a much smaller position size, which I find often equates to basically a runner. So you have a free position in a swing by just leaving some open. Yeah. One more thing I wanted to mention about this is Bitcoin has been absolutely dominating this rally. So Bitcoin has been leading the market, which I'm very happy to see as someone who holds a lot of Bitcoin, but also as that's just healthy for the market. But usually the way money goes is it goes from Bitcoin to ETH to major alts to shitcoins, right? So what we'll see in at least in previous cycles, what we'd see is a rally would start with Bitcoin or would get led by Bitcoin, and then ETH would play catch up, and then major alts would play catch up. So actually, what you can see right now is in the last 7 days, Bitcoin's up 13%, ETH is up 11%, so a little bit less, and then BNB, major alt, Cardano, Polygon, all of these are up substantially less than Bitcoin, right, in the last few days. So you can see Bitcoin's outperforming. Polkadot's actually keeping up a little bit, same with BNB, but you can see they're all kind of underperforming, even though they have lower market cap, so you would expect them to move more. And a good way we can see this is by looking at BTC pairs. So you can look on TradingView for charts for ETH BTC, BNB BTC, Matic BTC, right? There's loads of these basically for any ticker, and you can do TA on these as you would on any chart, and you can find what thing is going to outperform, right? So when you come to support and you start bottoming in places, you can look to get into ETH, for example, instead of Bitcoin, and you can like optimize your gains. In this case, I don't think ETH looks too solid here. It has a little bit of a trend line holding it up. But yeah, if it falls below that trend line, I mean, right now it's wicking, but if it falls below there, it has a big drop against Bitcoin, right? So its value against Bitcoin, if it loses this trend line, would likely come back down to the range lows, and we'd be looking at ETH being down 13% against Bitcoin. And this could come in the form of Bitcoin moving up more than ETH, or it could come in the form of Bitcoin moving up while ETH moved down, or they could both go down, but ETH just went down much more, right? So this has no inherent effect on actual price versus the dollar. It's just their relation to each other. And in this case, right now, ETH is underperforming in dollar terms, right? While both things are going up. But oftentimes you'll see alts dumping off against Bitcoin in bear markets too, because Bitcoin just moves down less. So you'll see a lot of altcoins that are down massively against Bitcoin in this bear market, right? All the ones that are down like 90%. So I think Sol BTC would probably be a good example. Yeah, so throughout this bear market, Sol was up massively first, but then basically in the bear market, Sol lost 90% against Bitcoin, right? So it's these are very good to look at to find if you're looking at a coin you want to get into. You can chart these to see maybe I should just get more Bitcoin, right? Or is it going to do well against Bitcoin? In this case, BNB is coming up on some support here. It's been a bit choppy. Had a bit of a fake out here from this downtrend falling wedge, and is now coming into like a major previous resistance, now support. I would be looking for it to bottom here, and then maybe later we can start seeing, maybe like April, we could start seeing some upside on BNB versus Bitcoin. But yeah, this is generally a pretty good thing to look at. And another one is BTC dominance, and you can do this for other coins too. And this is basically ticker BTC.D on TradingView, and this will tell you how much of the crypto market cap is in Bitcoin or in ETH or in USDT, right? So, and you can also do TA on this, right? So in this case, I have some old drawings on here, but basically we had a bit of a trend line here. We just broke out of that. We actually had a fake out here as well in May, which then confirmed this as a basically a high resistance level, which is now again a level to trade toward to. And in this case, we actually broke up, had a little consolidation, which on the lower time frames is probably a little bull flag. And if we draw our little bull flag here, we would take our, let me do this on the lower time frame. Yeah. Whatever, right? So we take our little mast for the flag, and we can put that on the breakout target. And where does that line up? That lines up right at 47.7%, which again is in our range highs. So we'd basically be looking for Bitcoin to be trading up to that resistance again. And this is also this pattern that it's trading in. So if I get rid of this line, you can see it a bit better. Basically a flat line of resistance with a basically a lower low structure is functions quite in the same way as what most people are familiar with, which is the ascending triangle, right? Where price comes down and you get it trading into this triangle and then you get the breakout, right? This is a slightly different version, and actually I like this one better. This is the right angle descending broadening wedge or something. Way too long of a name, but basically the reason I like this one is when price trades slightly lower lows, and this is also the same for higher highs, right? You get divergences. So if I pull up, if I get rid of some of these, right? If I pull up my RSI here, you can actually see that as we were making these lows, you can actually see that first low was way lower than the next ones, even though the actual thing kept coming down. And these are just give further confluence that you're looking for a bounce here, right? So whereas this pattern, the ascending triangle, has a decent hit rate, it's pretty solid, right? But this one comes with the added benefit of getting bullish divergence into it, right? And you can also invert this, of course. You can play it to the downside as well if you have a flat support with slightly rising highs, right? So I think we actually had that on Bitcoin here, if I'm not mistaken. And on the daily, yeah, we had a little something like that where we had 21.5. You know, we get a slightly increasing highs, big bearish divergence, right? We come up, we hold that same flat resistance, and then we trade around here and we just dump through it. In this case, you know, if I invert it, might be easier to get. We basically got a double bottom, right? Big bullish divergence, but we had a fake out, right? That's essentially what it was on an inverted. Yeah, but we're still below essentially that same trend line, and that's why I'm not overly long here. Again, I got good entries down here. If I'm going to enter any longs here, it's going to be very low time frames, and even then I'm not too aggressive. Yeah. Yeah, BTC dominance is basically just how much of the market cap, the entire crypto market cap, is in Bitcoin. And when this is going up, you can expect Bitcoin to continue outperforming because money is going into Bitcoin rather than into alts or stables. And you can also do this for ETH, and in this case, ETH has been in this range for a while. ETH is actually nearing the top of its range, and it would be in a little bit of a lower high territory. I do actually see this maybe coming up a little bit more. And USDT dominance is not looking too good. So if I get rid of my trend line, which already broke, we have a bit of a head and shoulders here. As everyone is, I'm sure, aware of, can understand, this is most likely to break down if Bitcoin continues like this, which again I believe it does. It's just probability. It doesn't have to happen. But where we'd be looking, we would be looking for basically USDT to lose 15% of its market cap value for the first target, and then I would be looking for it to come back to basically this big ascending triangle resistance, now support, so that would be like down 30%. again, we can take measured move targets. We place that on the breakout, which would put it basically on the higher end of that, back to 5% of the total crypto market cap in USDT. I'm not actually too sure if there is, yeah, so there's USDC dominance as well. This one's been topping out a little bit too, but also we could see this come up again, as this is kind of just a falling channel. So this is actually on, this would actually usually be a bullish pattern, so we could be looking for a bounce here, but essentially, I think Bitcoin continues outperforming other coins for the time being. But what we do usually see is Bitcoin leads the market, right? Which it just did. It's doing right now. And then other coins play catch up. So in the future, we'll see ETH outperforming to catch up, and then major alts outperforming to catch up, right? So basically, BNB, for example, has not really moved, and it's been in this big range for a while now. Had again a fake out to the downside, quite like Bitcoin did. If I delete all these lines, we're basically in this massive range here between 330 and like 265, I would say. We came down to 265 from our central line. Yeah, and now we're looking to probably trade back up to the 330 level, but that might take a minute. We'll have to wait and see.
Amazing. I'm in a Matic short from all-time high today, and I do think it'll dump a lot. Bitcoin just broke yearly again, so
Nice, man.
I'm hoping for the worst for Bitcoin.
Yeah, and this is also why I recommend people put monthly closes / opens on your chart. So you just go to a monthly chart whenever you get the new month. So we just came into March. I mean, this 2 weeks ago, right? But you just turn on your magnet and you put it put a little line. You press Alt H there, and you can put a little line basically exactly on that close or open, and you can actually even see here on a daily, right? So 2 weeks ago we had this close around here, right? When we came in March, right? So right there, we established this level, we broke through it, and now I was already calling back down here that I would be looking for, like, it basically touched support here, and I would be looking for it to come back. And a very obvious target was back to that monthly close, because price just likes to trade to where there's volume, and there's volume around the monthly close. And you can actually see exactly how that closes right below there. And now it gets a big wick here, and we could see a close below, and then you get the kind of decision action. I would honestly, I'm pretty bearish on Matic in the medium term here. I think, like, again, we're at a big resistance level. We got a big fake out on the daily. I think this could be either reject here or actually continue up a bit more, but I'd be looking for this to reject around the 130 area, which would be our basically 618 retracement or golden pocket here from this move. Again, I'm looking for basically lower highs on Matic. If we do get a break above, I would be still looking for that pullback there. If, however, we can hold above the monthly close and actually get some bottoming action there, I'll consider some longs on Matic, right? But overall, I think alts just have a lot to bleed left, and I don't think this. I think this candle is just going to be filled. I think we actually trade properly back down on Matic, most likely. But that's just my opinion with not really enough data to say about that. Again, we just react to what happens, right? We set our levels, we see what happens at those levels, and we make a decision based on that reaction. So like the further you go, the further you look into the future, the less accurate your TA is going to be. So I just try to look where is price likely to react, and then I'll just see what the reaction is there. ETH is actually finally not looking terrible. I mean, it also had this same big bearish divergence, now a bit of a fake out to the downside, but it's still below its highs. It still hasn't taken out this trend line. So basically, I'd be looking for ETH to come up, actually close above, and then for retest, you can get the retest and move up to 20,000, and we could basically look to take out this little high here from back in August. Yeah.
A bit of a random question, but is there any way to lock your lines and drawings?
Yeah, so you can you can just not delete them and they'll just stay there. But if you don't want to accidentally move them, you can actually just click on them and click a little lock symbol. And now I cannot move this at all. Look, I'm trying to move it, but I can't.
Yeah, I didn't know that. Thank you.
The more you know, man. And there's no bad questions. So if you're wondering anything, feel free to ask. And I see I'm actually running out of time here. So the other thing I wanted to go over today was I wanted to do a little trading strategy challenge, if you will. I wanted to help some of you guys get an actual strategy rather than just doing TA and hoping it works out, right? So I'm dropping a little link here in the master space chat, and you could use this one as well if you just want to write it. Let me share this. And oh my god, thanks. Basically, you can make a copy of some of these templates. You can just make a copy of the spreadsheet or of the doc I sent, and essentially, I want to help you guys create some actual strategies, right? So defining properly how you would enter, exit a trade, what would be your entry conditions, and what would be your invalidations, what would be your risk management, and how will you take profit, right? Because this is really the core of how you become profitable, right? How you become consistently profitable. I went over previously, when I went over risk management, I talked about win rates versus risk to reward. But realistically, you're not going to know your win rate if you don't have a specific strategy, right? Because you need to have a strategy to have a win rate. Otherwise, you're just trading for the sake of trading, and you're kind of just guessing. So, I mean, time frame. This is pretty self-explanatory. But basically, you just find think of what works for you, right? Do you work 9 to 5? Do you have very little time for trading? I say don't go lower than a 4-hour chart. Just trade the 4-hour, the daily, or anything, right? If you are constantly at your computer and you really want to constantly trade and trade as much as possible, I would say a 5, 15 minute, or a 1 hour, right? So I usually go on the 15 minute. That's just where I like to trade. So for me, the time frame would be a 15-minute time frame. What's my trading style? What's my edge? So find a concept. Just look around, find a concept or a combination of indicators that would give you some kind of edge in the market. So this can be anything from just regular price action. So I mentioned the swing failure pattern earlier, and I can share some guides on that, on what that actually is. But basically, it's the idea that price will sweep previous highs for liquidity, and then when you get rejection from there, you can get very strong risk to reward trades, right? But you can also use indicators. So I went over in a previous live a basic indicator strategy. I don't think it was very good at all, but it was just an example right? So you can just use confluence of indicators. So I've got it like here. I went over. You can use trend indicators to you use these for confluence on. You only trade with the trend. So this would be moving averages. If I were to go on this one, for example, I have my moving averages on my chart, right? These will tell me where the trend is going. So I would only take longs if my longest time frame moving average, in this case the green 55, right? If that's on the bottom and the lower time frames are on the top, that means it's an uptrend. If it's the inverse, right? So if I'm looking at the lower time frame EMAs being below the higher time frame ones, that's a downtrend. This is a basic confluence thing. You're more likely to win in longs if you're trading an uptrend. If you're in an uptrend, you're more likely to win in shorts if you're in a downtrend, right? So you can use a trend indicator like an EMA. You can use volatility indicators like the BBWP. This will tell you how much juice there is in a move. Or you can use, these are very popular, momentum indicators like the stochastic RSI or whatever indicator you want, or an RSI. You can use a regular RSI with divergences, right? So as I have on my chart here, right, I have an RSI on my chart always. So you can look for a price action with an RSI. So you'd be looking for, say, a bottoming pattern with bullish divergence, but you just want to define as much as possible what it is you're looking for. So in this case, right, we're seeing big bullish divergence, and we can draw a little trend here. So what you could say is when it breaks this trend, when it breaks this downtrend, with X amount of drives of bullish divergence, so each of these lows, right, is one drive of bullish divergence. So the more you have, the more strength is behind it. So each of these little moves makes for one drive, right? And then you could say basically when it breaks from that area, right? So in this case, this candle, that would be my entry condition. But then you need to basically find as many of these as possible, or of whatever you're doing, right? And see what the reaction was there, and see how will you enter, right? So our edge would be RSI divergences, RSI divergence breakout, whatever we want to call it, as long as it makes sense to you, as long as you know what you're talking about, right? How will positions be entered? So you could say enter 50% on the actual breakout here, but you could add another 50% if you get the retest here, right? So in this case, you would have had a bit of skin in the game, but you weren't confirmed or anything yet, right? It came down and then it tested, and then here you confirmed that you held that with a higher low. So this could be your second entry. So we can say, how will positions be entered? 50% on breakout, 50% on retest confirmation, right? Or slash higher low, whatever, right? And then what are my requirements? So this is where I would define my entry requirements. This is where I would, as specific as possible, define what I'm looking for on price for this to count as an entry, right? So in this case, I've made it, I have a single example, and I've made it very obvious what I'm looking for. I've shared a different strategy I've used before, the looking for a bounce in the pigeon puck. But basically, you want to look for define as specifically as possible what you're looking for in price for something to count as an entry. So if I'm looking, let me see if I can find an example. Yeah. No. Of course, there's none when I'm looking for them. Not in this time frame anyway. Well, whatever. So I would be looking for, say, I could define this as I want 3 drives of bearish divergence, right? So I want 3 of these lows on bearish divergence at least, and then see, say, a break above my previous high. So in this case, we got more, but we're still defining that. So in this case, we get a breakout of our trend. We get above our previous highs or whatever, right? You could define this however you want. Just come up with something as specific as possible for your strategy, right? Or you could, no, as I said, only look for the confirmation with the higher low. So you're looking for big bearish divergence, and then your entry is when you confirm a higher low. So in this case, we got a higher low here. You define what confirmed means to you, right? So in this case, we bounced on that trend line. I would call basically this action here as confirmed to me, but define it how you will. And then we get to, so our requirements for entry, let's just call this the breakout of the trend line, taking out our previous highs here. So our previous highs on the RS, on our like bounces basically. I'm not gonna write that down, but yeah. And then our risk management, the most obvious one is just a stop loss below our wick lows. So that would be we get a entry right there. We put our stop loss below that low, and then we get to the point of how will profit be taking? What are we targeting, right? So you can always look to target previous highs. So in this case, you could be looking back up to there or somewhere around there, right? I get you a decent risk to reward, or you could be looking higher, right? Again, this just find what you think might be an edge. Look for specific things on price action. Just look at a chart and see what happens on your indicators before big moves. Like, how would you have caught the move on your indicators, or how would you have caught the move on price action? What happened? And this is, I can't stress, this is how you actually learn trading and how you get that sense for it, is just by looking at charts and really seeing what happened on the chart before these big moves and happened on your indicators, and that's how you get comfortable with them. And I'm sure it sounds like a lot of work, and that's because it is. And I always tell people to take trading seriously, or just honestly not do it, because it's basically, you're learning a life skill here that can make you loads of fucking money. Just put that effort in. But once you get, you can basically look at what happens on price and look at what is most likely to happen. So you can target previous highs. You can look for certain percentage moves, right? So if you test enough of these, you might see that on your specific ticker, it moves so many percent usually, right? So I had a strategy where I would take profit literally at 1%, 2%, and 3%, because with my indicator setup, that was just the easiest way of doing it, and it was very profitable. You can use fibs, you can use support or resistance, right? Use anything that makes sense from a targeting perspective, right? So this would be, you're looking at, if you're looking at fibs, right? You can draw from your recent high to your low. In this case, it actually front ran the 618 a little bit, but the 618 is often a good target, right? So it's just find a way to get your target. In this case, I'll just say targeting previous swing high, right? And in this case, I would call that basically this bounce here, purely because there's no other action here, and this would be way too far. But again, define it how you will. I don't know your strategy yet. I'm sure a lot of you don't know what it is going to be yet either, but you want to just define them as specifically as possible. Find something that you're comfortable with, that you like. And then the last thing that's really there is invalidations. So if X happens or X is going on, I don't want to enter my trade regardless of it giving me a signal or whatever. So I usually don't have very many of these. I might have some, but for most of my strategies, this literally boils down to I don't take trades during CPI or FOMC. So if there's big economic news events, price action gets very volatile. So actually, I think this morning, I was like, if I go on the 30-minute, so basically around here, I think this was CPI. Wait, wrong day, right? So basically, this big pump was coming out of CPI, right? If you're on the lower time frames, you can definitely get chopped out by big news events as they move very aggressively. So, but yeah, usually I have just at least that in the invalidation. Here I had an example from a previous stream where I used indicators. So in this case, I was looking for my stochastic D line. So this is one of the two lines on a stochastic RSI to be above 80 or below 20, and it flips. So it changes direction in the extreme zones. My BBWP, my volatility indicator, was below 15%, and price crossed the 21 EMA. So basically, I had a moving average on my chart, right? So this yellow one here, and when it crossed that, when my other conditions were met, when price basically closed on either side of it, the conditions were met, that would be an entry signal. At least this was for the example. Not saying this is a good strategy. I just threw this together. I didn't really test it after that, but the structure of any strategy ends up being the same, right? You have your entry requirements for your edge, right? You find something in price action or in your indicators that is more likely than not to make money. You write that down. You try to optimize as much as possible. What are your take profits? What's your risk management? What's your invalidation? So in this case, I set my stop loss is below the wick lows, but on certain strategies, you don't want to get wicked out. So you might say you'd be looking for a close below, right? So you might only get out on a close, or you have or a different position that you get out, or a percentage move, right? This can be, again, anything, but just look at the chart, see what happens, and I'd say, I've given you guys these templates. Don't worry too much about which one to use here. I'd say just pick. I'd probably just say pick the static leverage one, as it's the most basic function. I have a risk to reward one as well. Basically changes the leverage, the position size, based on the risk to reward or on the max loss in your account. But what do you mean ping them, Jax? Or you mean I'll post them all on my channel in a minute too, and I'll pin them. I'll pin them there. So not in the master space, but in my own channel. So you can use any of these, but static leverage is just the easiest, as it's not as much as much data, and it's just less complicated. But again, you got your entry requirement, your risk management, your exit strategy, your validation. Got considerations, don't worry about it. But these are kind of the core aspects of any strategy. Just play around with it, and I would say for any strategy, test 20 iterations. So basically get the last 20 times that it happened, and if it's good enough, then you can choose to test it more. I would say any good scalping strategy can have you would look for 50 iterations, right? 50 times it happened. If it's profitable across those, it's good, but generally 20 is a good baseline to see if it actually has any potential. So I think recently I actually did something here. I do need to test it a bit further, but not the right one. Trading. Let's see. Yeah, so I had one here that's slightly different template, but I was basically looking for specific moves with one of my indicators on ETH here. Yeah. This is one other consideration. I basically said use whatever time frame you will. Basically, this is a strategy that was actually pretty solid, but it got fucked by fees, right? So this is a very low time frame strategy. So I'm looking at 5 minutes here on the 5 minute chart, right? Which it's profitable overall, but the problem comes in like if you just look at the P&L, right? The wins are much bigger than the losses. It wins more often than not. Grant this just 20 tests, but the problem comes in. I calculate the fees assuming market entries and closes, and because of the fees, the actual profit really isn't that great. Whereas if I were to basically get rid of this, and this is why it's so important, right? To keep these kind of to calculate these is basically this would be $1,200, or this would be basically 20% in profit in 2 weeks on the account, not being super leveraged or anything, but purely because of fees, it's only up 6.5%. So this is kind of why I would recommend just playing on higher time frames, because you're playing bigger moves, so you're getting less chopped out by fees and less screwed by them, right? Because if I wasn't paying these kind of fees, this would be a fantastic strategy, but right now it's just kind of mediocre, right? Yeah, this is again.
Let me ask you like a really weird question again.
Yeah, sure.
What's your ideal leverage to use?
Depends entirely on the time frame I'm playing. So what I'll do is I'll adjust my leverage to my account. I'll basically calculate it based on my account size. So if I'm going on my small account here on Bybit, if we go to USDT perps, so say I've got like $500 in this account, and I'm looking to leverage. I'm looking to basically, I'll always be on 10x leverage. And what I can do is essentially put in a price. I can click 10%. And if I'm on 10% on 10x leverage, 10 times 10 is 100%. If I'm 10 times 25, that's 250%. So 2.5x my account, 5x my account, 7.5x, 10x my account, right? So I'll never need to go more than 10x my account in terms of leverage. But basically this means that if I'm 2.5x my account, I'm trading with, say, like $1,500 instead of $500. It's a little bit less right now, but oh wait, not 1,500, like $1,250. Sorry. Or I'll be playing with 2.5k, etc. Right, while I have 500 in the account. But really, I just look at you can use these buttons here: buy long with TBSL or sell short with TBSL, and I'll set whatever my stop loss is. So I'll know my stop loss before I ever enter a trade. This is very important to know, right? If I'm looking to short here for whatever reason, or if I were to short here, my stop loss above recent high, right? So my stop loss here would be 25,188. If I had this much position size, I would be losing $90, which is way too much of my account. I'm always looking to aim around 3%. In this case, if I click 10%, 1x my account basically, I'd be looking at a $17 loss, which is just over 3%. I might lower this a little bit to say 0.015. I'd be looking at a $14 loss, which is basically 3% of my account here. And this is how I can basically calculate my risk on anything. But my leverage is always going to be 10. But I just changed the amount of coins I trade, the amount of quantity. But by being on 10, it just makes it easy to calculate how much I'm levered on my account. Yeah, some of these as I said, it depends on the time frame you're trading. Because if I'm trading a daily time frame, right, I might only need to use half of my account to get these kind of moves, right? If I'm looking at if I'm looking to get in here 20,400, right, I might set a stop loss here, but that's 5%, 4.5%, and my targets are there, something like that. Yeah. I'd be looking at multi-percent moves. I'm not gonna need much of my account open on that, right? Like I'm pretty sure I can calculate that here too. So 20,400 and then basically 19.5. Yeah. So even 0.015. So this is little less than 1x my account. I'd be losing a large chunk of it. So what do? I just go. I just lower that position size until it's about 3%. If I have high conviction trades, right, and I'm looking for really big targets, I might increase that a little bit. But usually, regardless of the time frame, I'll be looking to take the same amount of risk, right? And I will have some strategies where I might have less conviction, and I might, or when I'm testing things, I might do less, right? So I'll do, if I had very little conviction, I might only really risk 1% on something. But usually I'll just adjust my position size to fit whatever time frame I'm trading, to fit whatever stop loss I have, rather than like worrying about too much about my leverage, right? I'll always just be on 10x leverage because I don't need to be any higher. Even if I'm doing 5-minute scalping, like I don't need to be more than 10x on my account ever, right? Because I mean, even these small moves here, as like this tiny move here is 0.5%, right? That would be 5% on my account if I'm going max leverage on 10x, right? If I'm using my whole account on 10x, that would be 5%. So that's honestly with this kind of volatility, that's already way too much for me. Yeah. Also, as we were saying earlier about bullish divergence, we've got some here. This again, this is what I mentioned about getting comfortable with your indicators and your charts. I could tell you this was bullish divergence before even looking at my RSI, right? So again, I'm seeing a big wick with a low, and now we're getting a lower low while RSI makes a higher low. It's bullish divergence. Again, big wick. We're on support. So what I'm going to be doing here is I'd be looking for this to edge out a little bit, and I might enter on a specific candle if I think it looks bullish. Again, this is where I like defining a strategy comes in so clutch or so handy. Is you could have a predefined entry signal for all your strategies, so you wouldn't have to worry about does this really match. So yeah, well, I found one. It's not too clean. Yeah, so this is like my pigeon pocket strategy, if you will. Like I'd be looking for a bounce and basically like an inverted fib, but basically the golden pocket here. And usually I look for a bullish engulfing entry. In this case, I didn't get one, so I might zoom in a bit and I might get some confidence on this little pullback and then bullish bounce there. I'll look for different things on lower time frames, but essentially I'll have very predefined ideas and I'll be very used to what this strategy looks like. Right, I'll be very used to what this looks like on a chart. That I know how this is most likely to play out, and that's why I think it's so important. Like, I do really like Lendal, like the Pro Trader, but there's something about for me. There's something about manually backtesting strategies that's just so nice. I mean, Lendal will largely do the work for you, right? Which is great. But there's something for me about manually backtesting my strategies because I'll get a feel for them, right? So I'll already know what my largely know what my strategies look like, especially on price action strategies. Before, like as I get entry signals, I'll actually know how much confidence I should really have in this setup. Because I've seen the same setup so many times, right? Or I've seen different versions of the setup. So in this case, while it was a bounce from the pigeon pocket, right? I wouldn't be too. I mean, this one ETH. This one went a bit further, but right. If I'm looking at a bounce like this, right, I don't have as much confidence. I don't have as great of a risk to reward here, if even at all. I don't think I would even have proper confidence in this one, or it would have even entered this one, to be honest. But I always look to front run the one fib a little bit. Yeah, I had a little over a 1 risk to reward, which isn't fantastic, but it's not terrible. But yeah, I could tell like this is coming into, we're in a big uptrend. We're coming into support into our previous highs. We're getting big wick action. I'm not going to be, like, I wouldn't be stingy about getting exactly to my second target. I might just take it, right? Like, front run it a bunch, right? And I've played the strategy enough. I would still hold it to, like, around my second target, but I'd be looking to get out here, right? If I'm starting to see a big uptrend, bullish divergence coming into support while I'm shorting into it, basically everything telling me that it's kind of slowing down here, I'm not going to be stingy about getting my second target because the strategy said so, and that's why I think it's so important to just get hands-on with these strategies and just use them as much as possible when you get one that works for you. Because you get better and better with them, even if they're already very well defined, right? So yeah, again, I've dropped these in the Masterspace chat. I'll drop these in my my personal channel and pin them there. But just go look at some charts or grab some of your indicators that you like to use. Again, I have some in the other spreadsheet that I've dropped here, right? So there's an example here of some indicators. Use something that you this is like an example of a strategy, right? So use something that you know, or you do some research into some new things. You know, you can always learn some new things, and just combine them into this structure, right? Find how will you enter your position, what's your edge, what's your specific requirements, where do you get out, on risk management, like like if it goes against you, where do you get out? If it goes right, where do you get out, right? And these all have to be defined before you ever put any money to it. And what I usually do is I'll back test a strategy, right? So I'll grab one of these templates and I'll just go back in time and I'll look what happened the last few times we got this signal. So I showed one off earlier, the one that got fucked by the fees. Get rid of this. Basically, let's see. This would have been a signal for me, right? A long signal. And I would already know that I would be targeting previous high, and then I would look for a larger time frame high. And I'm always cautious with these, so I would pick that one. And these would be basically my targets, for example, right? But I'll just go back in time and I'll see as many times as this happened. So not that one. I marked a bunch off here, and these are a lot lower time frame scalps, right? But I basically go back in time and I mark off each time this happened, and you basically just write down what happened all these times. And this will basically compound the value of all those trades, theoretical trades, if you will. But and it'll give you a P&L, and you can basically say you can do an average of all of those, all of the ones you have. I don't have it in here right now because it'll just say it's an error because there is no values. Yeah, and I'd love to just, if some of you do this, I'd love to go over them either in my channel or the next stream, you can come up and we can basically go over it, see how we could improve it, and I might give away some Lendal list. I heard I could do that, so we'll see. And again, if you have any questions or any help or anything, you can always just ping me in my channel. That's what I'm here for.
Thank you so much. You've learned me a lot today. I've been trading for like 3 years, 3 years, and it's not until like recently I've been actually trading and not just pure gambling on price action.
Yeah, I've been where you are, man. And even now, like, it's only it's the same for me, right? So I used to be just gambling on price action, and I didn't really learn, and it cost me, man. I lost. I basically dug myself a $5,000 hole learning to trade, and I'm still climbing out of that to this day, right? So I don't trade with a lot of fucking money. Most of my money I keep in my spot bags because I still got improvements to go too, but this is generally just the way to go to make to get yourself a system, and to stick to it, and that's how you get away from the gambling and from the mistakes. And mistakes are still going to happen, of course, but
yeah, 100%. I did an AXS 100x back in 2020 or 2021, I think. Literally lost everything in below 1 second.
Yeah, I got
Yeah.
I had one time when Luna was collapsing, I had a very good short entry, but the mark price, so basically this yellow price that you see next to the actual price that's trading at, this is what decides whether you get liquidated or not. And because this is what the exchange thinks is the fair value of a coin. So when this price reaches your liquidation price, you get liquidated, your whole thing is gone. I was shorting Luna, decently big position size, but basically the mark price was 20% above the actual trading price, which meant I was trading with 20% of my account on 5x. So I was basically what happened is I just got insta liquidated. So I opened the position and my entire account was gone. And this is also actually why I often tell people to just trade on isolated, because that wouldn't happen. I keep I'm very anal now about that mark price if I'm trading shitcoins. So I'm fine on isolated, but even sometimes if I'm going on shitcoins, I will still put that on isolated. I'm not too worried about it on Bitcoin because Bitcoin is not going to make these kinds of moves that mark price would get so far away from the actual trading price. But yeah, it's
always enter limit, right?
Yeah.
Limit
so
price.
entering limit is just to save yourself on fees, right? This you can pull that up here in account my fee rates, right? So you can be looking at your fee rates on Bybit here. So in this case, derivatives at a taker. So if you're filling someone else's order on the order book, right? So if I go back on Bybit to the trading section, this is the order book here on the right. So each one of these things here is somebody else's order. So anything above here is shorts or sellers. So any shorts or longs taking profit, basically. And anything down here is longs or shorts taking profit. So buyers, right? And if you take one of these orders, so if you fill a long, say at a current seller's price, so if you fill someone else's order, you're taking an order off the order book and you're paying a 0.06% fee every time you do that. So this is when you open it and when you close it. So if you're and this is what we call market entering. So when you go open on market, right? When you it will immediately fill from the order book and you'll be paying 0.12% of your position, which doesn't sound like much, but I think if we go percentage calculator, if I'm trading $1,000 account, say I'm just going $1,000, what is 0.12% of $1,000? We're looking at $1.2. It's not too bad, right? But if we're going to scalp, right? If we're scalping these really low time frames, right? We're looking at catching really low moves, right? So if we're trying to catch a move like this, bad example. Of course, the day I try to show this, Bitcoin is fucking actually moving. Yeah, these kinds of moves, we're looking at, say we're trying to just catch these very small scalps. If we're looking at a 0.5% move or whatever, and we're paying a fifth of that just in fees, we're kind of just getting cucked on our profits, right? And usually when you're playing these smaller moves, you're playing with bigger amounts, right? And that's why that strategy earlier I showed you gets fucked, because it's like paying $6 in fees, but it's looking at which is basically just 0.5% on the account that it's looking at, right? So it's 0.6% on $1,000 account, right? So it's you're just making it harder on yourself. And that's why trying to enter on Maker, so when you put a limit order, basically if I'm looking to buy and I place a limit order and it doesn't fill someone else's, so if I'm price right now is 24,360, for example, I place one below that, I will show up in this order book, so I can actually show that if I do buy long, let's just do as little as possible. So if I zoom this out a little bit, because it's too far down now, of course. Of course, it's still too far down. You can see that little dot there. That's me on the order book, right? And if the price were to now come down and someone fills my order, I would get this 0.01% fee, which all of a sudden I'm paying way less than I would on this taker. So you're paying 6 times as much in fees if you're filling someone else's order than if you're trading yourself. So that's something I would generally say to keep in mind, right? To just whenever you can, try to enter and exit on limit orders. And that's also why I recommend when I do open a position. So if I were to open something here, again, just tiny fucking position because I don't want to fucking deal with anything right now. I entered on limit, right? So I paid basically nothing in fees. I'll set my stop loss, even though we're not really trading here, but set my stop loss. And when I set my targets, I'm going to say close by here. Rather than clicking here and setting my take profit, I'm going to say close by limit, and I can set my targets up 20-70, and this will already be on the order book. So if I zoom out, okay, it's a bit too far. If I drag this down to the 500s, you can see it's there on the order book. So when price reaches here, it will have to fill me to go any higher. So this is why we set it on limit, and we can get our targets for this, and we won't have to pay those super expensive fees on our exits. Yeah. One more thing I did want to note about the strategy stuff, right? Because I shared the link for this. Don't just be as harsh as possible on your strategy. And it sounds kind of backwards, but if you're going to be risking money on this, right? You kind of want to use to have these numbers be the worst possible while still fitting the strategy. So if you're if sometimes when you're looking at an entry signal, it's kind of iffy whether you would actually take it or not, and it didn't play out or whatever. So you might try to convince yourself not to put it in there or whatever. I would always just put the bad ones in there, and in all of these templates, I calculate for entering and exiting on market, even though I will almost always enter and exit on limit to avoid fees. But I always assume worst case scenario, even for my strategies, because if worst case scenario is still absolutely fantastic, then you've just got a great strategy on your hand. But if you're only playing the best case scenario, all of a sudden you might be trading and risking money on something that really was never that good to begin with. So just please keep that in mind. Just try to be harsh on your own strategy as you develop it. Let's actually see. So we got that bullish divergence, now getting big wicks, closes above. I will actually be looking for a bounce here, but I'm not actually going to enter anything here just yet. Well, actually, technically, I already did. Big longs, boys. 40%, 40-cent gains if we hit the target.
I'm 130% profit on the Matic short right now.
Which is how much on your account, because that's what matters.
Yeah, 25x lev.
No, but I mean, like, so if I'm trading on an if I'm trading on leverage, right, you'll always see people posting the screenshots, right? But what I can do is I can just pump artificially set this down to be 100x, and all of a sudden I'm up 32% on this trade. I'm not making any money actually. Like, I've got literally 0.001 Bitcoin in here. I've got $24 worth of Bitcoin, so I'm not making any money out of these moves, right? I mean, I'm making a couple cents, but now I can say I'm up 50% here, right? So usually I'll always try to be I'll always talk about percentages on the account, right? If I'm it doesn't matter if I'm up 50% or I just lower my leverage to 10x again and I'm up 5%, or I'll lower my leverage to fucking 1 and I'll be up 0.5%, right? The actual gains that I'm getting on my account are the exact same, right? The actual dollar gains are the exact same. So what I'll do is I'll just say I'm up 1% on my account. So if I'm up $5 on a $500 account, I'm up 1% on the account. If I'm up $15, I'm up 3%, right? If I lose a trade, I'll always risk 3% on the account, because the actual percentage moves do not matter. It just matters what your position size on that was and what that translates to in your actual account value. So this is people who refuse to people who will refuse to show their actual dollar gains and just post these big screenshots of these big gains or whatever. Let me just tell you about a little secret. I could do this. I can have a position open in both directions of the exact same value. And one of these can run absolutely massively, and one of these can go down absolutely massively. I'm not making or losing money either way, right? Because I'm net neutral. It's basically like not being in the trade at all. But I can still get I'm up 40% screenshot. So if you ever see someone with like a screenshot of 1,000%, either or thousands of percent, right? Either if they're actually a realistic trader, right? If they're not just some degenerate, they'll either be just a very small position of an actual trade they had, or they'll just be doing something like this, right? If I wanted to just be some Twitter guru right now, I would just leave this position open like this. Whichever way it goes, I'll get a big screenshot and I can act like I'm some god trader. When in reality, there was never any money made, So anyone who's very anyone who just shows you screenshots and won't tell you, can't tell you why they entered the trade or how much they're actually making off that. I mean, I talk in percentages on the account because, again, dollar values, people don't want to talk about how much money they got, which I completely understand. I'm just on a small account here, so I don't really care. But yeah. again, the percentages don't really matter. It's all just hot air, if you will. It's just about the actual amount of money you're making. As long as you're getting percentages on your account, that's what matters.
Right. So it's 1% out of $1,000. So it's 100, and the profit is or the percent is 100, and my margin is also 100.
Yeah, I just look at the actual P&L. It'll just tell you the dollar that you're up, and I'll just see what is my account size. That's how I usually just calculate it. Yeah, and the reason, again, for those who are still new to trading, right? You'll probably see these very big numbers, and people often think that it's risky and it's just degenerate business. But really, any good trader will be looking for lots of small gains rather than trying to hit a home run, right? Never get married to a trade. Never get. It's all about getting consistently small gains, and just pulling up a exponential growth calculator is a great way of looking at this. So if you have $1,000 and you're making, say you're making 5% a week for a year, right? So 52. So this is 5% every week for a year, right? All of a sudden, that $1,000 is now $12,000. But the thing is, you can do this. We're talking about percentages, so you could have 100,000, and all of a sudden you're 1.2 million. Right. But if I just do like just do that real quick. If I'm up 260% a single time on $1,000, I have a fraction of that, right? So again, this is just compounding your gains, and this is why it's so important that you just get small and consistent gains. We're not looking to double our account in a single trade. We're looking to get 5% every week. We're looking to get a couple percent on our account. And I mean, I say 5% every week. I think that's a pretty reasonable place to be at on average, right? If you're really doing well. I mean, for some people it might be more or less. I think I know people that'll have weeks that'll be up they'll be up like 40% on their account in a week. A friend of mine actually doubled his account in 2 weeks, but then he'll have a 20% haircut on that from some bad trades again. So it's really just it's whatever. But it's just about those exponential gains. Hello, Duck. How are you doing, bro? I didn't know you were in this server.
What's up, Pigeon?
Yep. I'm gonna wrap it up here. Enough rambling.